All right, good afternoon, everybody. Welcome back to the Opportunistic Trader. It's been an active day, active week, and here we are, 3:30, and we're joined by Tony Greer of TG Macro. How's it going, Tony?
Good, Mike. How you guys doing?
Great. It's been an active week. Some good trades to open Q4, but I'm looking forward to the weekend. It's been a long week.
Yeah, it has, right? And we got a little bit of volatility to trade here, so it's exciting. It's proven us right on my theory that you should be harvesting vol anywhere below 12, right?
Yeah, I
Uh,
mean, hey, we just traded up 17. We were trading 1736 about 30 minutes ago or an hour and a half ago.
yeah, right before the 3 o'clock ramp that has happened the last 2 days that the market has been getting killed. It almost feels like the Fed wants to let it down easy kind of thing, right? Because I still have in my mind that Stanley Druckenmiller's interview is getting around Wall Street now. And the thing that he said that stood out was, I don't know which rate hike it's going to be, but one of them is going to, knock this rally off of course. And 3 days late, 4 days after the interview comes out, IWM, the Fed raises rates and IWM, the Russell 2K, gets knocked right down to today's low at the 200-day moving average. So I think that that's something to sort of pay close attention to, while we've got rates flying higher here. The 10-year is flowing into what I've been calling the sort of danger zone all year between like 310 and 325, which is where people probably haven't adjusted yet because they're rates that we haven't seen in a long time. So I think we're seeing the adjustments on the screen in front of us right now with people bailing out of, things, small cap, techie, and in that order kind of thing.
Yeah, well, I'm looking right now, week to date, small cap, the Russell was down probably about 4.5% a few hours ago. We're not, right now down about 3.8%. So it's been an ugly start to the quarter, and it has been small caps and technology taking the brunt of it.
Yeah, it's going in reverse order of capitalization. Clearly, this is really, really an important dynamic, right? If you look at IWC, which is the ETF for the micro caps, even smaller caps than the Russell, that has already gone through its 200-day moving average, and that was flashing earlier in the week with like a 2 sigma free fall. Alerting us to the fact that this sector is definitely underway. And if you look at it now, it's got a triple top up at 110. It's breaking down through the 200-day moving average. And maybe Stanley Druckenmiller is right. And maybe this was the rate hike that derails this whole rally. But basically, if you look at small cap stocks, you can see every time the Fed raises rates going backwards, they visit the 200-day moving average and rally from there. So we'll know in a couple of days whether this is the same scenario or if it's a different one. And the beauty is that I think if it's a different one, you're going to have plenty of time to pile in and get short, the smaller cap stuff and the Russell and have them really put in a reasonable retracement right before your eyes, especially if we still see yields in the 10-year and 30-year ticking up the way we have been.
So are you looking for the small caps to continue to underperform?
Oh, I think they're done. I think they're done for the year. I think, I would be selling them and be out of them if I could, just for the same reason that, eventually the higher rates are going to affect the smaller companies more than the bigger companies. So while this move makes total sense that they're going down in order of reverse order of market cap, I would sort of just be taking this opportunity to peel out of the micro caps. I really would.
Yeah, the
I
best.
mean,
Speaking with you, it's great. You get some great sound bites right there. They're done for the year. Different things extending, but and you've been dead on with a lot of different trends, and even in this pullback, some of the sectors that you've been looking at to outperform, continue to outperform. And so, yeah, Russell and small caps heavily underperforming for the week. Actually, that IWC that you were talking about right there, down 4.4% for the week. That's a hefty loss considering what the total year. That's basically 3/4 of the year right there, given back.
Yeah, it's worth. I mean, the whole thing is worth noting on a market cap basis because you finally now got Fang breaking down below its very own 50-day moving average. If you look at just the Fang index, so it's interesting that all of a sudden big tech has backed off as well, in addition to the micro cap stocks. So you got to be careful, in a rising rate environment. And my whole idea is that with yields creeping up above 3.25 or toward 3.25 in the 10-year, that the majority of slow moving money managers are just reacting to this stuff now. So if you want to get out ahead of it, you might want to still own some downside for next week in the smaller cap stuff in technology and see what happens. It's certainly worth the risk reward to test out if there's a follow through to this week's downside, if you ask me.
Well, it's also over the past month, we almost got to the point where some managers, like you heard it from a lot of different publications, a lot of, just watching a lot of interviews, people were just tired of the underperformance because people have been heavily under invested. And then they start, all of a sudden they say, okay, I'm up 1% and the S&P is up 10%. I got to jump in. I got to get more invested because, I can't take this underperformance for the year. And then all of a sudden they pile in more and then the market corrects.
Oh yeah, well we have a lot of trapped capital in a lot of different stocks and sectors. Right up the highs. My favorite trapped capital stock is Facebook.
I was going to comment on that one. We were talking about that earlier around that 160 level. We've had a clear break below.
Told you we were going to revisit the Cambridge Analytica lows. Nobody wanted to listen to me 3 weeks ago.
But you've been all over that one for a good $15-20 actually.
Yeah, I'm staying with it, man. I think Facebook's going back down to the 120 range, but like we've pointed out, there's definitely been an institutional buyer slowing the slide down. But I don't know. We'll see what happens if it gets below 150. Then basically everybody that bought Facebook in 2018 is underwater. And I'm talking about the sort of slower moving traders, the guys that aren't going to just get out when like hedge funds will know when it's time to be out of those stocks. These are guys that are going to watch the drawdowns go quarter after quarter after quarter, and then they're finally going to sell in a distressed fashion. But we can't look that far into the future. Let's take the win that we got this week with social media and the builders closing on their lows.
Well, it's funny. I just put up the chart of social as we were talking about Facebook, because I know you've been all over social, and that's just a textbook lower high sort of pattern there.
Yeah, that thing is going to surf the moving averages right back to where it came from at around, I think around 150 in the social media index. We've got a double top. We've got a curling over below moving averages. We've got a fundamental reason between, Facebook users bailing out on the platform, Mark Zuckerberg looking utterly ridiculous every time he opens his mouth. I mean, this trade's getting easy.
It's funny. The Zuckerberg comments.
It is what it is, man. He gets loved by everybody on the media when he goes everywhere else. It's okay. He takes a little ribbing on Opportunistic Trader, right?
Sure.
Isn't that fair? So look at the 10-year now, 323, highest yield we've seen. I mean, 2000 going back to what? 2000 and what? 2011 we are now?
Well, let's talk about that because, we've actually been talking to a few different friends and, what's your take? Are we, is that the trigger for the week? The fact that yields moved higher and, here we are closing the week above 320 and at the highest level since 2011, like you're saying? And
I think it's very much, in my opinion, the pace rather than just the direction, because the direction has been with us for a while. The 2 years has been grinding higher since President Trump took office. We had the 10 years sort of, it was hovering around 3%. And now all of a sudden we have a massive move to 3.25. And in 1 week, that is a lot for the bond market to absorb and digest. And I'm telling you that it has not digested 3.25 in the 10-year yet. And I think that's why you're seeing this sell-off in the equity market, is that the equity market is just going to have a natural reaction to that. And we'll see if it shakes out like the last several rate hikes, or if this is the Druckenmiller rate hike that knocks the rally off of its track.
Yeah, and then, the one variable also that's going to be pretty interesting next week. So we have Columbus Day on Monday, but everything's pretty much open. But Asia is coming back, or I should say China is coming back from a week off. So it'll be interesting to see how those markets react, given that this week, equity markets have been under pressure. NASDAQ is down, actually, in front of me, but the small caps are down 4.5%. NASDAQ's probably down close to that.
Yeah, they're down big. I would imagine that with the dollar strength, that there will be a repricing in the yuan, and that'll be interesting to see. It'll definitely be weaker. So yeah, we could reignite another emerging market leg down, which is another literally a marquee trade that I've had on all year as well, and that is due to the unwinding of all these money managers getting pushed out the risk curve into emerging markets and buying Argentina 100-year debt for 7% because it's a great yield. And now we're going to see the total 100% unwind of that with a protectionist president in office. And, I'm looking forward to EEM trading back down to 30 or so. So I think it's got a big, big move left.
EEM's another one that has a beautiful just channel lower, lower highs, textbook technical on that. And it's just amazing that differentiation this year, a divergence between the S&P and EEM. I mean, they just look like completely different animals.
Yeah. Yeah, it is. That is a dynamic to keep a close eye on. This rotation, the rotation started getting violent before the indices all backed off. Like we saw these sectors, the energy sector was going sideways and tech was going straight up and healthcare was going straight up and social media and builders are going straight down. So these violent rotations are oftentimes what finally gets the broader indices to crack. And hey man, if they're going to be running for the exits in micro caps and then small caps, it's only going to weigh on the big cap stuff. And now that we've got FANG turned, it's a big deal.
So I know that you run, typically you say between 20 and 40 positions. What percent, what would you say, what are you typically, what's your typical net long exposure versus short exposure, like maybe a few months ago or a typical, and then where are you now, ballpark?
I'm back to probably, I'm definitely leaned overall short now. My biggest positions are in social media, EEM, and builders. My longs are in the refiner names and in cannabis stocks, and then a few other random plays. But I've stayed long Marathon Petroleum here, and I've stayed long, the 3 or 4 cannabis names that I have, and I'm happy with their performance. And I'm staying short, EEM, XHB, and social media. And those make up probably a little bit, those 3 positions make up more than half of my trading account right now.
Gotcha.
But it's also, I've been advertising in my newsletter for the past, I would say, month or so, in line with my other presentations that I've given at Real Vision, that this is the time to step on the gas. And so these are the closes that I've been waiting for. And these are not exactly the closes that I'm ready to cover on. I want to see what happens over the weekend with China coming back, and I'm willing to let it ride, into China opening up after being closed for a week. I think this is only going to add pressure to emerging markets.
Yeah, no, that makes sense. And what about which are the few housing names that you think? I know you mentioned before Pulte. What are your least favorite housing names?
I'm short Lennar still, and that's finally making its way towards 40. Pulte Homes has still made a new low pretty much every day this week. It's still got room to meet Pulte, I think, can trade that back to, 21, $22. So there's still a reasonable trade there. DR Horton has literally finally started to crack. But I'm getting bored with that because I thought that might have, I thought that was sort of eventually going to give way, and it just does not give way. So I kind of want to put my short, either just cover my short there, maybe add on to one of the other ones. Toll Brothers is another one of the names that I feel like has got a little more downside and finally cracked. I think Toll Brothers can make its way back down to the high 20s. So, they're really stretched here. Toll Brothers, for example, has just fallen from 40 to 32 in a straight line. It's hard to be short XHB and not cover that. But when I look at Home Depot, I see a big potential blow off top with that move above 210, and then a turn lower. So I'm hoping that Home Depot drags that XHB even lower. I think that Home Depot has definitely got to test its 200-day moving average at 192. And when it gets there, then I'll see where XHB is and decide what I want to do.
Yeah, it's been interesting the divergence between Home Depot and the housing, greater housing bucket, because how they typically are correlated, and Home Depot's been outperforming that pretty heavily recently.
That's a consumer stock, really. That's in the builders index, Mike. You know what I mean? I just found a better index to express my builder short, and it's actually ITB. Indigo Telephone Boy is another good ETF. That's the iShares US Home. What is it called? The iShares US Home Construction ETF. And I like that one better. And I kind of wish I was in that because that is mainly weighted in home builders. For example, that ETF is 27% of it is just DR Horton and Lennar. So, and then you go down to NDR, Pulte Group, and then Home Depot is the 5th biggest member at like only 5%, which is a big difference from trading XHB, where Home Depot is, it's 4% of that, but they're all evenly weighted. So my point is you've got much bigger weighting in the actual home building companies and less of a weighting in the consumer stocks. And that's why I'm sort of wishing I was short ITB right now and not XHB, but lesson learned.
Yeah. As we look ahead to next week, what catalysts or what are you looking forward to? Anything on the radar that you think could really move the markets?
I'm not looking much past my youth lacrosse tournament on Columbus Day Monday that I have every year. So I'm really, I think it's kind of the markets are in motion right now, driven by the macro scenario. And, I'm not really looking for headlines. I'm not looking for data. I'm looking for the continuation of this macro trade to unfold before me. And I think that that's what's going to drive the markets next week. So no, I'm not looking for any specific event. I'm going to trade the price action as usual. And like I said, that's after our big Columbus Day lacrosse tournament.
What's going on with the Columbus Day lacrosse tournament? Is it
Well,
big New York?
I coach my son's travel team, and it's a pretty competitive league, and it's a fun tournament that we won last year in the pouring rain, and we can't wait to go back and play it again. That's all.
Nice. What age group?
We are U13 this year.
Oh, that's awesome.
Yeah,
I got some Little League Baseball over the weekend and Hurricanes FSU.
Oh, man, that'll be fun. Huh? You going to the game?
I could. It's in Miami, but I think I might just hang out at home.
Okay, that won't be bad. Well, it sounds good either way. Well, we're going to have an exciting close in 14 minutes.
Yeah, it's interesting now. MOC imbalances that I was seeing was down like 300 or 400 million to sell. Now I think I just saw it flip to 200.
It's all fake.
Yeah, I think so, Larry.
Now came in with $1 billion to buy right on the close. So they're trying to save the market as always. So,
what do you think, Larry? What are you expecting for next week?
Them buying them, whoever they are, as Mark Fisher would say.
Them.
They are so. It's just amazing. Nothing.
It is amazing.
They don't care. It doesn't matter. Yield could go to 10%. They're still buying stocks. So something is really wrong here, but we'll see how it all parses out. Today was interesting though. The market was, terrible, and it did the exact same thing 2 days in a row. Like there was nothing going on. People were freaking out at lunch. I was at lunch at 1:00. My phone was blowing up like it was like 1987. Oh my God. I go, the S&P is down 1.1%.
Yeah, I know. And literally there are financial journalists on Twitter that are just tweeting the fact that the Dow is down 300 points.
I know. I mean, when this thing goes, it's going to be the biggest thing we've ever seen. I'm just telling you. Listen, the market's so long. I mean, my brother-in-law's a PM, and he literally, his clientele freaks out on one down day.
Yeah.
One down day. So it'll be interesting to see how it all goes. But we're a little bit short. We're going to stay short. I would say if we closed on the low, VIX would have been 18 or 20.
Yeah.
I mean, literally in a day, it would have doubled in a 2% correction. So what does that tell you? I mean, it tells you nobody has a hedge. Everybody's freaking out. Yeah. You know what happened, though? I saw some comments on my phone when I was at lunch from Einhorn, who's like down 30%. And he's like, saying it's the end in Apple. And he's saying, the same thing. Tesla's over. Everything's over. But he's somehow down 30. So
yeah, exactly.
Well, I will point out Tesla. Think about the round trip for the week on that guy, because it was last weekend. Musk settled with the SEC, and shorts got crushed. Moved up to 315. But here we are. We're down on the week. It's right on the low. It's a buck off the low. It's not pretty if you're long.
There's only one thing left for Tesla.
What's that?
A Netflix series. Literally, there's nothing to do but to cover this as a general interest story anymore. I mean, if you're invested in the company, you've got rocks in your head. I think he proved. What makes me upset over the last couple of days is that Musk not only proved that he's batshit crazy, but that he's a bad guy. Like he's literally hosing his longs. He's making fun of the SEC. I mean, this guy. It's almost to the point where you're like, do me a favor, get this guy out of here.
Yeah.
It's a shame. It's a blemish for the market. It's a sign of the ridiculous asset bubble that we're in, where anything goes. And, I'm looking forward to the distraction being removed from our screens. And I think that we're not far off from that.
Well, I think the most interesting part about it is that after he settles, he comes back out and tweets again. And then let me ask you a question. If you did what he did, okay, you think you could get away with it like that? I mean, nothing. I mean, the guy literally did probably one of the most illegal things I've ever seen.
Yeah, you and I would have been in the perp walk on Channel 5 News if we did that. I mean, there's no question about it.
I mean, they were rushing the settlement with him. I mean, and now the Justice Department's looking at the SEC. It's great.
It's a total. That's what I mean. It's a total farce in broad daylight. You know what I mean? Like, it makes.
I think the SEC would have done better by actually taking them all the way and losing, opposed to settling for basically peanuts.
Yeah, they settle for nothing. The bottom line, I mean, if he was smart, he would, number one, never go on Twitter again after that dumb tweet, and number two, he wouldn't even be CEO of Tesla anymore, and the stock might be higher. But I don't think that he's definitely got his ego is involved with this agenda, and I guess the market will finally.
But my thought is, why does he care about shorts? He's running a auto company. Like, what does he care? Like, mental, what does he care who's short? If you prove the shorts wrong, the market would go up twice as much on the shorts. You need shorts.
Focus on execution, and the shorts will get taken out by themselves. It's a side story.
Yeah, well, the problem is there's so many debt covenants and so much debt that he needs to move the stock up so that like, listen, obviously he had these warrants that were struck at 360. He had to get the stock above 360 or he had to pay. So, I mean, if we know that and we're sitting here at our desk, you don't think the SEC knows that? I mean, come on.
Hey, Tony, also on that last comment you made about stock being higher, I saw some talking heads saying that there's a $130 premium in there for Elon Musk, i.e. if he's not there, the stock's $130 lower. Now, where they get that number, complete BS, but...
Oh, I think it's higher. I think it's higher.
He's gone,
the only chance the company has to survive is if they remove him from the head office.
Right.
The company has a chance to make an actual product that the world will buy and compete with the other big auto manufacturers that are going to be in the arena soon, but not if he's at the helm. Clearly, I think if they remove him, the thing might go up $120, right?
Yeah, I think it probably would do better without him at this point. The technology's in place, the company's in place, and listen.
Yeah. I mean, he's only a detractor at that point, but it's a shame that this thing is the sideshow for the stock market. There's better stuff going on.
Right, but why? I just don't understand. You have a board of directors. I mean, they're not saying anything to the guy.
He might not be listening, Larry. Who knows?
He's true.
Definitely not listening. They want him tweeting no more. They want him as quiet as possible. But he's his own. He's a billionaire and he can do what he wants.
Yeah, exactly. He's in the eccentric leader bucket at this point.
I'm just shocked, with the thing I just want to just ask you or see if you have thoughts on. The S&P's down 50 basis points. That's like nothing. Yeah. It's probably going to be down less. And the world was going crazy when I was at lunch. Like vol was 17. The market was down 1%. What's going to happen when we go down 4 in a day? It's going to be 4, and that's nothing.
No, it will definitely be hairy. This is just a conditioned market, Larry. People are not used to the Dow going down, the stocks going down. We've just gotten everybody nice and accustomed to this long, small range, low vol run that we just went on in the S&P from, 2,600 to 2,900. And there was barely a hiccup the whole way, even through the trade wars. And so now that we're not having a trade war discussion, but the stocks are going down, the whole world's freaking out. And they don't understand this relationship between, the rates going higher faster and how portfolios are going to adjust to it. And that's just, we're seeing people getting knocked off the end of the risk curve, and that's it.
Yeah. To me, it just mind blowing. I mean, if we closed down 20 points from here, the world would have been freaking out over the weekend. It would have been like one of those, like, oh my God, what do we do on Monday morning? And now the market comes back 15 points, which isn't even 40 basis points or 50 basis points. And everybody is happy. They're like, okay, good. We don't have to sell again.
Yep. Yeah. No, there's definitely no real selling going on. There's definitely no blood in the streets yet. There's definitely, no heads rolling and this is not a capitulative sell-off. This is just the beginning of something that looks like it could happen, that we should probably expecting to happen in certain sectors and certain capacities. And then for the S&P sort of to level off and trade sideways in a range for a while, if not, really back off. But I feel like we're finally at the point where at least it can happen and it's showing signs and the volatility market is perking up. So at least
honestly, not basis this close. I mean, the market, I mean, we'd have to crash to get back down to the level we were at 115.
Yeah, that's true. I mean, the S&P is still going to close above its 50-day moving average after dipping below it. Like, I don't know, maybe we're just chipping away some room at the downside.
What level do you have as the 50-day?
In the ESA, in the S&P Mini, which I always look at, is 2882.70 is the 50-day moving average, ESA. So
nice. Yeah. All right. Well, have a great weekend. Good luck in the lacrosse tournament.
Yeah, let's go Yankees. The whole thing, man. The fall sports calendar is heated up.
Yes, absolutely. Good sports weekend. Yeah, like you said, baseball, football, college football, and junior lacrosse.
That's right.
All right. Talk to you later.
All right.
Have a great weekend, guys. Make money.